are built that way because like all the houses in my neighborhood are the same base level. But like my house to the left, my neighbors to the left, theirs is backwards, and the neighbors to the right, theirs is the same as ours. But then everyone over time is like, you know, added extensions and done things like they have a pool and they have a big room that bakes off one of their rooms, and the people who lived here before us like built backwards. And so it's always just really like strange. House building is weird, and what makes it worse is now that you own a house, when you're like, you know what I'm going to do? I'm going to wire the shit out of it, and like then you got to like cut into walls and do all this stuff, and you're like, what is it? Like I literally, no joke, in the other half of where my office is, the basement is all drop ceiling. This is solid ceiling. Over there's drop ceiling. One day I was like trying to do some wiring, and I was like, there are 98 coaxial cables in here that are going nowhere because I only need one for the cable modem, right? There's no who uses coax cable anymore. So I was just like trying to find it all, and I'm like pulling on shit, and like I found I guess the original people who built it didn't take out, you know, the like the single bulb white socket that you just like put up at a ceiling like in a closet. Yeah. There's like 7 of them out above the drop ceilings that are just don't have bulbs in them that I don't know are still functional or not. Because we have actual like fluorescent lights in the thing. Jeez.
Right.
Owning a house sucks. Much like owning an MSP. Been a near.
Most clients don't understand DMARC, but they do understand when their invoices go to a customer's spam folder. With Easy DMARC, you can turn email deliverability into a high-margin managed service. Their platform features beautiful, white-labeled reports that show your clients exactly how you're protecting their brand from spoofing and phishing. It's easy to deploy, easy to manage, and even easier to sell. Boost your MRR and protect your clients' reputations. Click the link in the description to head over to their website and join their MSP partner program today. Compromised credentials are the #1 threat to your clients. If an attacker gets into a mailbox, do you have a second line of defense? Material security brings zero trust to the inbox. By adding a layer of MFA to sensitive historical emails and adding phishing herd immunity, you can protect data even after a perimeter breach. Don't just filter email, protect the data inside it. Click the link in the description and check out their website to learn more about how Material handles modern cloud threats.
What's up, everybody? Welcome to the All Things MSP Podcast. I'm your host, Justin Esgar, and with me always, I'll put this way, our guest today is a fractional CFO, which is perfect because Eric currently has a fractional beard, Mr. Eric Anthony.
What's up? It is shorter than usual because I trimmed it up for PAX 8.
Mine is longer than usual because I trimmed it before PAX 8 and I haven't done anything since. And again, Wolverine mutton chops. If you go to youtube.com/@allthingsmsp, you can see what it really is. It's just that I think it's gray in the middle and the light covers it up, so it just looks like I look like the Calvarine. Anyway, like I said, we have a guest today. Actually, he's got a beard too. That's why we invited him. Not true. Yeah. Other reasons. Mr. Andrew Jordan, president of Nodewise, a fractional CFO and accounting firm specifically for MSPs. Andrew, how are you, man?
I'm doing good. Thanks for having me. And man, I'm feeling really good about my beard right now.
Yours is much nicer and thicker than both Eric's and I's. Obviously, we need to have another conversation for our other show, All Things Bearded MSPs, which has 100,000 members. I'm kidding. Why don't you just tell everybody at home real quick, who are you? What is Nodewise? And let's get into something.
Yeah, so I'm a CPA. And for a while, I was CFO of an MSP, and it was a good experience. So when I started my firm, I kind of started focusing on managed service providers because I knew the space and realized, just like the one I was CFO of, you need some advice. You need more than just the basic books, the basic taxes. You need to be proactive with your taxes, try and save on your taxes. And also, especially, you needed someone to actually walk through the financials with you.
Yeah, that's really important because, like, we've talked about this a lot on the show where the MSP owner wears so many hats, and one of them is that financial hat. And like, we're not finance people because if we were, we'd be finance bros with button-down shirts and vests. Instead, like, because we are so technical and we try to figure out the puzzle and do all the tech stuff, we tend to forget about the accounting part until it's time to do our taxes, in which I think every one of us collectively just lets out a really disgusting sigh because we don't know where our money has gone for the year. And this is something where like somebody like yourself would come into play to like help out.
It's actually the most common thing we hear. I'm making more money than I ever have. Like I keep growing, but I have less money in my bank. Like, where's it all going? Real common.
Yeah, I literally have the exact same problem and fight with my accountant about it all the time, and he always has some bullshit answer for me, and I don't believe him whatsoever. So yeah, well, I think it's important that people understand the idea of a fractional CFO, because I went through something like a couple of years ago where it wasn't necessarily like what we were talking about, where like I don't know where my money was going. My thing was like I wasn't sure if we were being profitable or we were bleeding money because the numbers didn't like jive in my head. And so I literally like I looked for a fractional CFO who understood the IT world up in New York. And I was like, here's what I'm thinking. And she was like, well, what do you like? What's your goal for figuring this out? And I was like, my goal is for you to tell me that like I'm looking into things the wrong way and everything's fine. Because like if that's the case, that's the best case scenario. The worst case scenario is that I'm correct and I'm bleeding money dry and something is terribly, terribly wrong. And so we engaged and I gave her all my QuickBooks data and stuff like that. And, you know, my blood sample and social security number and whatever she needed. And she came back to me with these numbers and she's like, you're actually like a really profitable, healthy company. And I was like, I don't believe you. But like the numbers read well. The numbers read well. To the point where like we laid out what the next couple of years could be like and all these things if things work. And like from this is what I don't understand. And Andrew, I'm coming to you with this question is like the numbers read well, but my brain is like, no, you're still losing money. So like, where is that breakdown happening? Why is it that MSPs can't figure that out? Why is it like the initial question of like, I'm making all this money. Where is it? You know, because my wife wants to know where's the money. Like what's the story here? What are we all doing wrong?
There's multiple things that can happen, right? Like you can have some timing differences. You can have some things actually wrong with your books. Some business lines you're losing money. Other ones you're making money. So there's all those. But leaving that aside and answering, I think your really big question is, it comes down to people who are really smart and good at technical things. Like MSP owners tend to be technicians themselves. You tend to think that you also can understand money because money, we all know it. Since we're kids, we're familiar with money. It seems like a concept. It's easy math. It's arithmetic. But what money really is, it's highly emotional. And studies have shown this over and over again that humans are really bad at making rational decisions when it comes to money. And so you can have this feeling about your money that's totally disconnected from reality. And we especially see this like when you're little, you can kind of run things from your gut. And then you get to a certain size, we typically see it $1 million plus, you're starting to build out a team, got all these things going on, and your gut starts to mislead you. And that's when you really need like a trail guide to say, hey, we've been through this before. This is what the next several steps are going to look like. These are the KPIs, you know, the key performance indicators that you should actually look at, the speedometer, so you can actually know where you're actually sitting in reality, not just what your gut tells you.
I mean, I can tell you, and I'll steal this line from High Fidelity, my gut has shit for brains, and I feel like I need to eat more yogurt. No, but that does make sense. Like the emotionality of it, I think, is like a big piece. I never even really thought about it till you kind of said it that way. Like I'm very emotional about money. I know where I'm from originally. Money was a big thing from the town I was from, and you know, I look at those numbers. You know, I run the QBO, and I look at our previous year, and I'm like, hey, we're making more money than we did last year, and that's awesome. But where are we screwing up? And like, it's this constant chase, and I think also. And correct me if I'm wrong, where this is where it leads MSP owners to think, I need to get more customers because they're trying to chase a dollar that may not actually need to be chased.
It's always the answer. More customers is always the answer that people think, but it's usually not the right answer, right? It's usually I need to improve my profitability. I need to improve my performance. I need to stop doing this. I need to start doing this instead. And the answer is rarely, you got to do all those things first. And then the answer is more clients. But yeah, people usually start with if I just have more clients, everything will be better. Right. It actually gets worse.
Because you forget about all the things you need to buy for that client and the time or whatever it is.
So we have this client right now we were just talking about. They have $1.6 million in a bank account. in a single bank account. Like, we're not currently working with them. We're just talking with them. And we're like, you're not even getting interest on this. It's a check. $1.6 million.
I was going to ask if it was like a high interest or not, but clearly
it's not. It's not a money market, nothing. And you're way over the FDIC limit. So if anything happened, like, you're not even protected. So not only are you not getting interest, that's actually a very dangerous place to be, but they're doing it because of this sense of security that they tie to having.
They might as well just have it under their pillow.
You might as well have it. But that's why people actually would put money under their mattress or whatever, because the sense of security, People tie security and money together really, really well, and it's hard to let it go. But if you can think back to, I have another client we talked to about this, and this is, my CFO stuff tends to be a lot of coaching. It's not just like the numbers. And I said, okay, you guys are on track to make $1 million profit this year. And at what point are you going to let go? And are you going to, two owners, are you going to start taking the extra $500 a month in distribution? Like, literally, we're talking $500,000 a month in additional distribution, raise your quality of living a little bit. You made $1 million profit. And like, well, when we hit 1.2 million, then we'll feel really sick. No kidding. This is what they said. And I said, guys, 3 years ago, you were at $500,000 profit. And you told me when you hit 6, you would do it. And then it was 8. You just keep moving the horizon always.
Yeah. Well, what do they do that they have they're making $1 million in profit? And what am I doing wrong?
It's a bunch of different things. And the biggest thing, though, that we see, and you can answer this question or not if you want to, but when you look at the profit and loss, there's really 3 sections to it. There's your income, there's your cost of goods sold, and then there's your expenses. Mm-hmm. And people tend to gloss over that middle one, the cost of goods sold, and I think it's the most important. Usually when we talk to new MSP, and these are, $1 million to $5 million is who we typically work with. So they're not just getting started. I say, what's your cost of goods sold? And they say, I don't know what that is.
Right.
Or they'll say, well, I've got my, my technology purchases, my direct costs. Rarely do they have their labor broken out. Your technician labor needs to be in cost of goods sold.
Yeah.
Because you don't know then, is it costing you 60 cents to earn $1? Is it costing you 10 cents to earn $1? They don't have any concept. And that's the most important. I think that's even more important than your profit is. Because if you don't have that number in good shape, you just double in size, you just made all your problems worse. Now you have a really healthy profit margin and you can maintain that and watch it as you grow, make sure it doesn't erode too much. Now you're on track to really grow.
It's funny you brought that up because Eric and I did like an entire series on finance. We did I think it was like a 6-part series, like just in the beginning of the year. And one of the things that Eric had mentioned was the idea of the labor costs, right? Which people aren't tracking. I know damn well I'm not. I have a line on my P&L that just says payroll, but it also includes me.
Right. Yeah.
How does somebody put a labor cost like that into their P&L?
Yeah. So you take that labor line and you say, these 8 people are technicians. So I'm going to get their total payroll and I'm going to just move up to a line that's called labor cost of goods sold. And then my admin and, whoever else, they're going to stay down in expenses. And depending on the owner, you might stay all in expenses if you've grown to the point where you're really not doing the technical work, or maybe you need to split some of your payroll off. This isn't a perfect thing. It doesn't affect your taxes in any way. So you get a, kind of cost benefit at it. 50% of my time is doing technical work. Cool. Well, then move 50% of your payroll too. And now all of a sudden you can see, here's how much it costs us to earn what we're doing. And then you can start comparing to other MSPs and you can figure out what are they doing better than me, or maybe I'm doing pretty good. Maybe I'm spending too much on expenses because of all my crazy travel. I don't know. Yeah,
it's all those conferences that we have to pay for because the conferences aren't covering our flights. Incoming rider. But I mean, it is an interesting concept to put that in there because I think a lot of MSPs, and I don't know, Eric, you correct me if I'm wrong here. Like, I think a lot of MSPs just look at the bottom line. They look at a P&L, they say like, I'm profitable, and then they get their taxes and they go, well, yeah, now I'm not profitable because you don't take your taxes out of your P&L. Right. And most people believe that the P&L is the end all be all because if they want to go to sell their company, right, they're looking at their profitability at the bottom and throwing, a 5, 6, 7 times multiplier on that, thinking that's what their company is worth. All of what I just said is wrong.
Pretty much. And labor, because it's probably the highest percentage cost of your cost of goods sold, if you're not figuring that out when you're figuring out the profitability per client or profitability per hour, then you really don't have the vision of your business that you need to have to know if you're in that range of best in class profitability.
Yeah, or if you're bleeding out, you know?
Right. Because it could be a loss and you don't even see it because you're not applying. You're just looking at all your payroll as overhead rather than actually attributing it to the service delivery, which is really what you're trying to do.
But I feel like if you're bleeding out that badly, you would know, right? Because like then the owner has to skip paychecks and things like that. Like, am I wrong? Am I wrong?
Eventually you will know. It kind of depends. Like, let's say you got a loan and maybe that loan is artificially floating you by for a little while, right? Because you're making payment on those trucks, but you got the loan. Maybe you got an SBA loan. Maybe you got, a line of credit that's slowly inching up and you're not tracking it. So there's all sorts of ways you can be getting economically worse off and not realize it for a while until the noose really starts tightening. Yeah, like if you're going to go bankrupt, you probably know it in advance. But do you know in advance enough to turn the corner?
Yeah.
Here's the thing though too, like MSPs rarely go under. You're like dentists, right? Or you're like CPAs. Like you really have to, if the founder is able to do technical work, which is usually the case, like you really have to screw up badly if you're running a fairly small team to actually like go bankrupt.
Right. Which is good to know. All right. So let's push past this part and talk about taxes. Cause I think this is something, I don't think we ever really talked about taxes.
Yeah.
They suck. No one wants to pay them. Period. End of story. Like we're done here. Thanks. What should MSPs do to help lower their taxes? Because like I know my taxes are out of control mainly because I'm in multiple states, and for whatever reason, I have to pay personal taxes in all of those states, though I don't live there. And so it becomes like a little bit of a cluster with like who I'm paying what and where and how. And then the Fed takes their gigantic chunk because according to them, I made money, even though my wife goes, where's the money? See how this all loops together? Mm-hmm. What kind of like proactive tax planning should an MSP be talking to their accountant about to help alleviate the April or October, if you defer like deadlines where you're going to get hit with like a $50,000 bill. And now all of a sudden you got to take that into the line of credit, which then leads you to the bleeding thing that we just talked about.
Exactly. I would say there's like 2 or 3 things you really want to consider. One is, and this has nothing to do with lowering your taxes, but knowing that you owe $50,000 in September of this year instead of September of next year is a lot better place to be. Being able to pay quarterly estimates, paying it in a chunk, like even before we even get to lowering your taxes, it not being a surprise, it not being this thing hanging out there that's stressing you out all the time because you have no idea how much it is, like that's a pretty big win. And that's pretty easy. Once you get over $1 million or so, I think everyone should be doing that. Should at least be having quarterly estimates.
Quarterly estimated taxes, yeah. Okay, yeah. I like that, yep.
That's an easy one. Another thing I would say is when you're talking about saving on taxes, it doesn't make sense to spend $1 to save a dime. So sometimes people say, well, buy a bunch of equipment. Don't buy equipment you don't need. Now,
I've heard people say buy the Mercedes G-Wagon because it's over a certain tonnage and therefore it counts as a commercial vehicle.
Uh-huh. Yeah. So I actually have a series that I recorded called like Bad Tax Advice from TikTok. and that's one of the things on there. That does not show the rules work in that case, right? Like as expected, it's not quite that simple.
Yeah.
There's that. The least sexy thing, but honestly the biggest thing is this record keeping. Are your books actually done correctly? Not just like done, but like are those reconciliations actually done correctly? We've seen people who the books are reconciled in QuickBooks. I got a little green check mark, but they didn't realize that there were uncleared items stretching back years, being hundreds of thousands of dollars. And oops, they accidentally overpaid because a lot of their income was duplicated. And so their tax return was showing all this profit. And they're like, wait, their wife was saying, where's all the money? Why can't I go shopping? The tax return showed we made $500,000. Well, that's because you accidentally inflated a bunch of your income and you paid $50,000 in tax you shouldn't have paid. That happens. That really happens.
How often is that happening? Because like now I'm going to call my accountant and I want to beat the shit out of him.
Well, so it happens way more. If you send invoices out of QuickBooks especially, that's where it becomes very easy to accidentally duplicate. It has to do with what your workflow is and that kind of thing.
Yeah.
But if you're sending invoices out of QuickBooks, you need to be checking for that and see. And the way to check for it, by the way, just a quick aside, we talk about the P&L. That is what everyone looks at, the bottom line of the P&L. But like, spare 5 minutes for your balance sheet. Look at your balance sheet and say, do these numbers seem absolutely insane and clearly wrong?
Like, in your head, you've done $250,000 at the time, and whatever reason the balance sheet is showing 400,000.
Exactly right. You know that, and you got negative items on there. You got things that are just really clearly screwy. Just like eyeball it for 5 minutes, and if you say, "Gosh, this can't be right. I can't have that much in credit cards or that much in my bank account or whatever it is," then you got a problem that's going to have impacted your profit and loss without you realizing it.
Yeah. I don't think I've ever looked at my balance sheet because I don't know how to read it.
Well, and that's the thing. So we call accounting the language of business. That's like what the tagline that's always used. I learned Spanish. I have a minor in Spanish. And I will tell you that learning accounting is just like learning a foreign language, which is why smart people who are good at math get really frustrated because they think they should be able to understand it because they're thinking that it's a form of math. It's really language with numbers.
So here's my problem with that concept is, one, I barely speak English well, so I can't speak another language, let alone accounting. And two, my wife, Michelle, can only speak Spanish when she's drunk. So I don't know if I want her to be doing drunk accounting.
Seems fair.
Just saying, like, I'm in a precarious situation here.
You need a translator, sounds like.
I need a fractional CFO and tax accountant.
Sounds like it.
There you go.
Here's the other thing I encourage people real quick. Look at the balance sheet for 5 minutes, but also, does your tax return actually bear any connection to your books? And if you're working with someone good, you say, well, of course it does. But you sign that tax return, you send it to the federal government representing that it does, that it's accurate. But and I get that no one knows how to read their tax returns. That's why with all of our clients, we actually do either a meeting, or if they prefer, we just do a recorded session with a screen share. We're like, here's where your numbers come from. Here's what they mean. Because we just are on taking a new client right now, and we looked at their last year tax return, which no one's ever sat down and looked at their tax return with them. These guys own some properties too. And I said, wait a second, you said you did a big remodel of your office. I don't see any remodel on here on the fixed asset schedule. It just got left off.
Yeah.
Because they only see their CPA once a year, and I don't know if they mentioned it, got left off, doesn't matter. They pay $50,000 too much in tax.
Wow.
Because they had a couple $100,000 of improvements that got left off.
That's crazy to think about, that kind of such a simple mistake. I think another one that comes up is the R&D credit, right? A lot of firms don't think they can do the R&D credit when it's kind of like a no-brainer at this point to go back and look and say, did you work on your company? Yes. That's the R&D credit, basically. I mean, I'm simplifying it hardcore, right?
Yeah.
But
it counts for a lot that people don't think. They think it's scientists working in a lab, that's research and development. And it is, but it's also developing processes, mapping out, every time you map out a complex network, no one's ever done that before. Probably a lot of that labor can count. So it depends on what you're doing. If you're just doing break fix stuff, maybe not so much. But if you're doing a lot of more complex cabling, networking, design work, probably.
Or especially now, if you're building tools in AI and vibe coding, that also counts as against that R&D credit, which I think is really interesting. All right, so I want to jump now to cash flow, because everybody's problem, right? This is the stem-all from the other two things we've been talking about here, which is MSPs live and die from monthly recurring revenue. Right, that is the gold standard for all of us, because Carl Palachuk said so 20 years ago, right? From your perspective, what should a business do to make sure that they can structure their business in such a way to have cash flow, maybe build a little bit of a treasure chest without screwing up everything else, and being able to still take their paycheck and stuff like that?
So I actually this morning did this exercise with my kids. My wife and kids came to my office. We do this every summer. And we set out our goals for the summer. And they do little sticky notes. My kids are 9, 12, and 14. We've done this every year for 3 or 4 years. And then we're going to print out their goals and what they want to get done this summer. Read 5 books, whatever it is. on the wall in our house, because whatever you see, you get more of. It pulls you in that direction, pulls you more toward. And like we already talked about, money is highly emotional. So if you want to have better cash flow, you need to have like a little ticker. You need to have something. And monthly recurring revenue, I agree, it's super important. But it's not just important because you can cover your basis and make sure you can cover payroll and that kind of thing. It's also important because it's easy to understand. I had $100,000 monthly recurring revenue. My goal is to get to 120. I can really easily conceptually understand that. And if I made that my goal, it's going to help pull me in that direction. I think that's really crucial.
But so what are things like, okay, so we have it written down. That makes sense. Sure. And knowing it, but like, are there tactical things that an MSP should be doing to do like profit first as an example, right? Like,
sure.
Is something like that really good for MSPs? Is there some better methodology here to like build out such a way? Cause like, I think the big thing is like, again, we said like, where's the money going? It's because you don't have it or you spent it not even paying attention. Like, or the better question is, are you even saving it?
Right. Yeah. So there's a couple of things that I think are worth looking at on a regular basis that a lot of MSPs don't do. Like we already talked about, even the basics of looking at your balance sheet, not happening. Understanding what your cost of goods sold is, not happening. But like the more intermediate stuff is where it gets really meaty. What's your gross profit, which is income minus your cost of goods sold? It's called gross profit. What's your gross profit by product line? Oh, yeah, my gross profit's only 30%. Yeah, but that's because I sold a bunch of Amazon stuff, which we all know is locked in at a really low profit margin.
Right.
I need to exclude that so I can figure out what kind of profit I have on the rest of my stuff. And lo and behold, I thought I made a bunch of money on my big government contracts. I don't. I lose my shirt on those. It's the little businesses I make money on, or vice versa. And there's not one like across the board this is true. We have clients that make a ton of money working with cities, local governments. We have clients that make a ton of money working with small businesses. It depends on how you do it, how you price it, where you're at, all these things. But gosh, if you don't know, if you don't even know for your own numbers, how do you make good decisions?
Right. It's funny you mentioned that because I remember we did this exercise a couple of years back when we were on FreshBooks, and we were time tracking, and we actually figured out like how much we're getting paid per hour at every customer because they're charged per device on a monthly basis. And it turns out like our favorite customer, we were getting like $85 an hour, and this other customer who we hated, we hate everybody, but they weren't using us. But all of a sudden now we're making 120, 130 an hour. It was such a better deal for us.
Yeah, that one. So what we do is we do custom dashboards for people who want it, right? We use this custom dashboarding system, and we figure out per customer where you're profitable, per like product line where you're profitable, and then the other key thing is per employee. Because it turns out that George is super nice and everyone likes him, but gosh, his realization rate's just awful. No, and maybe it's his fault, maybe it's the clients we have him on, but we should know it.
Yeah. George has always been a problem for us.
Yeah.
Eric, you got anything for this?
I think there's a couple of things that I want to point out that you guys have talked about, but I think deserve being brought to the forefront. And that is, money is emotional. I love the fact that we're framing it in that. And one of the ways to not make it emotional is to put the reality in front of you often. And so I did this without realizing I did this when I had my MSP. I had dashboards in the office from Autotask that told me where I was every month with sales, MRR, project work, the main things that I needed to know about where the trajectory of the business was going. And that took my gut out of it. Yeah. Right?
That's good. I mean, yeah. What you can measure, would you see what you can measure or something like that? I forget what the expression is.
What gets managed or what gets measured gets managed.
That's it. See, this is why we keep you around.
Peter Drucker. I even know who said it.
You know what? 2 points for you. Nope.
Well, here's the thing we do, and it depends on what kind of company you want to build, what kind of culture you have. What we do with our team, because we're technicians too, right? In the CPA world, we get together with each of our people each quarter, And in addition to giving them feedback and all that kind of valuable stuff and making sure we're connected and aligned, we say, and here, by the way, is how much money you earn for us. And you want to make more money, earn more money for us.
Yeah.
And that's how that's going to work.
We've done that with our team also.
Highly motivational for you. If you do it right, highly motivational for you.
Oh, no, we're doing it wrong, but I'm still telling them if they want to make more money, they need to earn more money. And that's what it comes down to. So, all right. Well, Andrew, as we wrap up, where can people find you online in case they want to work with you as a CFO or to get their taxes looked at and things like that?
Yeah, absolutely. Nodewise. That's our website. That's our brand. If you're interested in custom dashboards with Power BI or us looking at your tax return or just having a conversation, we're right there.
All right. Sounds good. Eric, any final words before we say goodbye to our good friends at home?
Just that I think we've talked about it today, how MSPs are primarily technicians. They don't understand the language of business, which is accounting. And if you don't have time or the inclination to spend understanding it and learning it, you really need to find yourself that translator.
Let Andrew translate all of your tax documents into Spanish. So that way only my wife can understand after a bottle of tequila. That's how it works. Well, Andrew, thanks for being here, man. Much appreciated. For everyone else, check us out, facebook.com/group/allthingsmsp. Look at us in the YouTubes, youtube.com/@allthingsmsp. We want more YouTube subscribers. So if you do listen to us in your car, pull over, go to YouTube, sign in, subscribe to the All Things MSP channel so we can get those numbers up. There's other reasons. I mean, you guys can figure it out. It all comes down to money. Like, subscribe, ring the bell. You know what to do. That's Andrew. That's Eric. I'm Justin. Bye.
Thank you for listening or watching the All Things MSP podcast. If you liked this episode, go ahead and give us a thumbs up, hit that like button, and consider subscribing to catch all our weekly episodes. And from your host extraordinaire, Justin Esgar, and myself, Eric Anthony, your humble producer and All Things MSP founder, thank you very much for spending your time with us. If you are not aware, All Things MSP started as a Facebook group and now supports over 6,000 members. We also have a LinkedIn page for those of you who don't do Facebook, and make sure to check out our YouTube channel for even more content. And a special thanks to our premier sponsors, Blumira, Choice Cyber Solutions, Easy DMARC, Material Security, OIT VoIP, and Sync 365. And thank you to the rest of our sponsors. Without sponsors, we could not do what we do for the MSP community. Please consider checking them out. The All Things MSP podcast is a BizPow LLC production. The views and opinions of the hosts and guests are their own and do not reflect the thoughts and opinions of any employer, vendor, sponsor, or random taxi driver in the Metro DC area. Be sure to join us next week for another exciting episode.